Alright guys, welcome to this video. We're going to talk about the anchored VWAP, a very nice move that I love, and that is if we place the anchored VWAP very well and the market touches it very often. This is a very nice setup. We see multiple times to adjust $100 and get 500 trade opportunities out. Please use ours as a demo account, no financial advice. So first of all, it is very important that you understand that the anchored VWAP, it should have a fixed rule set, what I really love to use. That is to place it always on the lowest point of bigger structures. I'm going to draw you an example and then I'm going to show this to you on the practical side. And this is something what is really cool because trading is mostly about money management. And this is something I hope you can improve your trading with. That means if you see that the market is here having here this low, it's called, and it does a higher structure and you see that it pushes up, you need to see that it's pushing up very aggressively. It will not occur every day, but you will see it maybe multiple times a week or even multiple times a month if you trade 2 or 3 times a week for 1 or 2 hours in the US session time, the S&P 500 for example. If you place the anchor VWAP here on this low here, because here you see that the market was pushing away, the market did around the same length away also. This is very important actually because you see reoccurring lengths that the market is going up and coming back. When placing here or there the anchored VWAP, this is very important. You have here smaller structures, but it's very important to place it always on the bigger structure. Because if the market did, and this is something that's very important, if the market does this length and we place here the anchored VWAP, it will show us a line, and once the market comes here back, very often it will do the same length again as it did here as number one. That's something very important to understand. Sometimes I love to combine it also with retracement. That means here, so for example, number 2 is a retracement. We saw in the past that the market did this length coming back. Sometimes we can use it also here. Number 2 would be around this length here that you see here. And then starting here, then what we want to see here. Very important is for me to see first that the market pushes away. And then from there on, because number 1, as we just talked about, had this length, if that would be this length also here, number 1, very often we get here, and this is something that's very important, we get here a red candle using a 1-minute chart. And then sometimes there's this very long green candle that is this long. Those are hard to trade. But when having here a small green candle on the right side, there's something like a countdown. It will count down from always 1 minute because it's a 1-minute chart. When adjusting here $100, very often we get until here. In this case, it would be $300. That would be too less. Sometimes we get a tiny green candle, and this is what we're going to look at. That when adjusting here $100, we will get here $500 trades. And we get 2, 3, 4, 5 pieces of them. And this is what we're going to talk about in this video. So first of all, it is always a 3-step procedure. Step number 1, make the chart so small as possible. As you see here, use your full screen as you see here on the right side. Make this one like this, the chart. Look at the high reference. Look at the lowest reference of the point. And once you can identify that the market wants to go more up here because you see that the structure's up, let the market push away. It would look like this, for example, that we cannot see the future. We will place the anchored VWAP here. We will not find your search or find here any trades. Once you see that the market is touching here, now it starts. And this is something what's very important to understand. Here you see a lot of green candles. The first color switch. Adjusting here maybe $100 is pretty cool. And then seeing here, very important, aiming now for this area up here. When adjusting here $100, this trade here would be, you see a risk reward ratio of 12, that would be $1,273 in profit that would work. Now you see that red and green is getting lower here. And once you see again a lot of green candles, as you see here, and then a color switch, I really love that. You see here a lot of green candles are starting, but it goes lower. Here you see a lot of green candles. Here you see the first color switch first, by the way. And here you see the second color switch. When doing the same thing again, when adjusting in trading here, $100 here, you see here up here, it will be again like $1,200. When adjusting here, for example, because here you see red, green again, when adjusting here $100, around here or a bit lower, it depends how you like to do it, then you can see we have here a risk reward ratio of 19. In the practical execution, I think 5 is totally enough. And you see here the risk reward ratio of 5 here, because in trading, it's all about money management. There will be trades eventually that will run up, as you can see here, to this area, around this area here, on the bottom side, on the middle side, or on the top side that I love to aim at. But if the market is so distant away and the candles are that small, it will be more important to me actually to see that the market does from here to here a movement within this length, within 1, 2, 3, 4, 5, 6, 7, 8, 9 candles you see here. Then it did within 9 minutes around. You see here within 10 minutes, the market did here the same movement because these are 10 candles, for example, and the same length. And I would assume from down here to up here, the market would do the same movement. In this case, it's 20 minutes you see here from here to there because this was just like 9 minutes, right? And this is the double length, so it's 20 minutes here around. And then when you see here now a small candle and it's realistic that the market can make the move, I think it's good just to take $500 on average. Because in trading, it's all about money management. And money management shows us, for example, if I'm using a $5,000, $2,000 account and $100 a trade, I want to make sure that I only lose $200 a day, for example, and each winning trade should be a $500 in average winning trade. It means if I lose now 8 times $100 and I lost 800, if I just have 2 trades that are $500 in average, I make $1,000 in profit. Profit means I made just money, right? And this is something what is very important in trading to me to understand, like it is about a risk reward ratio of 5. Everything above 5, I think is just too much. It's very important with the risk reward ratio on the practical side, especially if you see here that the market is not managing to push here up or here higher. Then you see here a consolidation phase. Those are very hard to trade. We would need to use the anchored VWAP down here to enter trades, and these are very mentally hard because we see a lot of red candles and then entering the trade. Instead, what I really love is that if the market touches here the anchored VWAP, goes up with the color switch to trade it, does a lot of candles again to trade momentum up, and then based on experience, starting here in this area here, because the market did not push here higher, I would not actually assume the market continues to go here higher. It is very hard here to trade and to continue trading up. And then just like maybe assuming the market goes down back to the 1 day VWAP, and then it's just opposite. Seeing here a lot of red candles, for example, and then looking now, where can I see a small red candle that is closing? We're going through that. I'm going to teach you this one also in this video, by the way. That means here we have here the short position. Is this red candle that small that if I adjust here $100, that I get a risk reward ratio of 5 trading down here, or even to this low, and here you can see a risk reward ratio of 7. Is this red candle here small enough that if I would trade it with the stop placement here, that my risk reward ratio is 5? Yes, it is. Is this red candle small enough that when trading this one, that my risk reward ratio is 5 trading either to this reference here, because the market is pressing very much up and very often it will not reach the anchored VWAP, then it will go to a midpoint here, or it will go there, and there's a risk reward ratio of 2.91, for example. So this would be 2 less money, but it would reach here a risk reward ratio of 5 trading down here. So it doesn't matter sometimes if you trade up or down. It's literally the risk reward ratio. Are you able to see that? And then over the days and weeks, it's about quantity and quality. A very good example is here from a trader that traded, and you can see here how the trader has 10 losing trades, lost $1,000, and had 12 winning trades, but made $8,000. And the trader can afford now, because the loss in per trade in average is $100, can lose now 70 trades more. So the trader could have lost 50 trades and have only 10 winning trades and still make thousands of dollars in trading. And this is something what is very important to understand when it comes to day trading. There's a person, his name is Jack Butcher, and he says when wanting to maintain a lot of money, it's about to use big money and low risk. But when wanting to make money, it's always to use small amount of sizes of money, but the highest risk as possible. And that's the main reason why we do futures trading. So very important as always, when we see the market is going up, on the right side we have a timer. When we go on the right side, you see your timer. In 5 seconds it's going to close the candle. 3, 2, 1, candle closes now. So when entering right now the trade here, for example, and placing the stop here, we're trading this closed candle right now. Each candle we trade needs to close. And as you see here, lots of red candles, a color switch. What I also look for, like is really, we can see from here to there, the market was going up, going down. From here to there, the market was going up, doing the first red candle, going down. Check this out. From here to there, the market is going up, doing the first red candle. And then here can be also a very good entry, for example, for the trader, because he says like, oh, I see here 2 times the market does the same length in retracements coming back, and then wanting to trade this with a risk reward ratio of 5. The reason why, for example, a stop out can occur here is, I think when you make this one small, it's just like if you have here a lot of candles up here, what I would like to love to give you pre-configurated is that mostly the market wants to go back to this consolidation phase because it's weight. Either the market wants to go down here or you see the market is going up here. And currently, I think because the market is more near up here and it couldn't manage to go here down for 2 times. You can see how it tries to spike here for once, for twice in the past. It helps us just to show us right now, like if it cannot manage to go here down and it wiggles up right now and even touches the zone, it's like a magnet, that of course it makes more sense that it wants to go more up. Like these kind of things. But this all comes with experience. In the beginning, it's literally about, I think the most important exercise right now is to see, like, can you see in what direction the market is going? Are you understanding how to use the anchored VWAP? For example, if you place it here on the bottom, here in the lowest part, as you see here, the market is touching here the anchored VWAP or very nearby. So I would actually assume the market is going to touch the anchor VWAP first, or placing it here on this higher low a bit, as we just spoke with the higher low. And then you can see it touches here. And then once the market touches the anchored VWAP, sometimes it just goes a very aggressive up. And then the interesting part is, for example, as you see it here, once the market touches the anchored VWAP, the color switches, a red and a green candle, makes more sense very often than just here before. Because here you see a lot of red candles. And then once the market goes really away, comes back to the anchor VWAP, you see how the market is pushing up. Check this out at the market. Hope this makes you a better trader. Wish you all love, good trades. JT out.